Well, hello, everyone, and thank you for coming today. It is such a pleasure to see everyone, and I want to welcome you to the Benjamin Z. Meller Investor Networking Group. My name is Benjamin Z. Meller, and today I'm going to be talking about some very interesting topic in the world of investing. And this is something that can be extremely profitable when well executed. For many years, I have done these personally, and many of my friends that are investors have also done them. These are called short sales. And what I'm going to describe, the examples here, they are for the United States. But whether you're in Germany, whether you're in the United Kingdom, even Ukraine, wherever you may be in the world, these short sales exist. It's something that is always available as an option, but it is something that most people don't know how to make money with them. And in this presentation, I'm going to show how it works in a general level. So what exactly is a short sale? Well, a short sale is where you are an investor and you find someone that has a problem where they are not making payments. They have stopped making payments on their bank debt. Maybe they are going through a financially difficult time. Maybe they're going through a bankruptcy. Maybe they're going through a foreclosure. Maybe they're going through a divorce. Who knows what the reason is, but they have some reason they're not making payments. And the bank who extended them credit is contacting them and saying, hey, you need to pay that debt or we're going to take this asset. And then what you do as the investor is you first reach an agreement with the person that has the asset, the one that has, for example, if it's a property, say it's a property, you talk to the property owner and you work out a deal to purchase the property for less than the value of the debt. Once that agreement is signed, you then go to the bank and you negotiate directly with the bank to get a discount on the debt owed. So here's an example. Let's say that there's a bank debt of $250,000, and let's say that this debt is secured by maybe real estate, maybe it's secured by a boat, maybe it's secured by a house, maybe it's secured by a business, whatever it may be. There's some asset that has a debt of $250,000. You've reached a deal with the seller where the seller will sell it to you for $80,000. Now, I'll talk later in the presentation about why a seller would agree to that. I know that when you first hear that, that may seem unbelievable that the seller owes $250,000 and you're going to get the seller to agree to accept $80,000. But we'll talk about why that happens later. Then the true value of the asset, the actual market value of the asset is perhaps $200,000. So if you successfully complete this transaction, you will capture $120,000 in equity profit. So that is exciting. And this is something that around the world, these opportunities are always available. No matter what country you're in, they're available. It is so, so exciting. Okay, so let's talk about why would a bank accept a short sale? Because a lot of people, when they first hear about this, they say, no, a bank wouldn't do that. Why would a bank do that? I mean, they could just take the house and then they could sell it for $200,000. Why would a bank agree to that? Well, that is a great question, folks. And let me tell you, it has to do with the banking regulations. Basically, banks are penalized for carrying too many what are called non-performing loans on their balance sheet. So if a bank has too many non-performing loans, they will have regulators come in from whatever country they're operating in. If it uses central banking, fractional reserve banking, which the majority of banks in the world today, in every country almost, they're using fractional reserve banking. So there'll be regulators that will come in and say the ratio, the percentage of performing good loans to the percentage of bad loans is too high. If you don't get this fixed, we're going to take control of your bank. And that is the last thing any banker wants. They stop caring at all about that one bad loan. They don't like the fact that they're going to lose money on it, but with fractional reserve banking, the way that it works is if they have one bad loan for example, 250,000 on the books, if it hits in the right way, if the numbers line up, it can impact their ability to loan out as much as 2 million, maybe 2.5 million. It depends on the country and it depends on the reserve ratio. But these banks, they hate non-performing loans. And that's part of the reason it's so hard to get money from a bank. If you've ever tried to go to a bank and get a bank to make a loan, you know that it's a very extensive process. So they are penalized for these non-performing loans on their balance sheet. And that is what drives them to want to get rid of it. And that is why they are willing to accept these sorts of offers. They don't always accept them. They may come back and counter. They may say no, they may reject, but sometimes they accept. It depends on a bit of a luck of the draw, but you've got much better odds than gambling. If you attempt 5 or 10 short sales with banks, some of them are going to go through. Maybe not every deal, but some of them will. So that is definitely exciting. So now let's talk about the next question that people have is, why would a seller agree to do this? Because they put themselves in the mind of the seller and they think, wait a minute, if I had a debt of 250,000 and I had an asset that was worth 200,000, I would not agree to accept 80,000 as an offer. But they are thinking like someone that is rational. They're not thinking like someone that has a situation that has gone on a long time where they really want a solution. The bank is already telling the owner of the asset, if you don't return that asset, if you don't repay the debt, we are going to sue, we are going to take the asset. So the bank has run the charges up to 250,000, for example, 50,000 in fees and charges and penalties. And maybe there's been a year of no payments. And believe me, you will find loans that sometimes have gone 2 years, multiple years with no payments. Of course, it's not that common, but it happens. So with this sort of situation, the seller has an unfortunate problem. Whether he sells that property for 225,000, or whether he sells it for the market value 200,000, or whether he sells it for $1, either way, he gets zero because the bank is going to take all of the money. So that is the seller's situation. He's got an asset that he's going to lose all of the equity, all of the profit he's going to lose. So now he's sitting there and he's saying, well, the bank is pestering him with phone calls, with lawyers, they're being threatening. And people don't like to be threatened. It makes them angry. It makes them not happy with their banker. Years ago, when the banking relationship started, they were friends, they were buddies, they liked each other. But now that this situation has occurred, the seller's no longer happy with their bank. He thinks they're idiots. He thinks they're greedy. He thinks they don't understand about his problem. So sometimes sellers are unhappy with their bank. And since they get no money from the sale, they don't care what price it sells for. Now, I know to a really smart seller, they're going to be thinking about, wait a minute, aren't I going to get a tax bill when I get this phantom gain? But that is not the way that the majority of sellers are thinking. The majority of sellers are not thinking about their tax bill. They're not thinking about any of that. They are just thinking, I'm not happy, I need to do something. So that is why you can actually work a deal out where you can work something out with the seller, like, hey, I'll pay you $1,000, I'll pay you $2,000. Let me try to do this with your property. Give them some money to move out of the property, if it's a house or whatever it might be, and give it your best shot. You can do that at the point where you conclude the sale. So now let's take a look here at what does the actual paperwork look like. Well, it sounds interesting, this idea of a short sale, but I mean, how would you actually do that? Well, I'm going to show a real example of paperwork, And this paperwork is going to be a little bit different for every country, but it's all the same. I guarantee you there's this sort of a form that exists in the UK or Germany or Ukraine. These forms are always out there. So here we've got the form. This is actually an example of Bank of America in the United States. And I'm going to show what this
actual document
form looks
from
like.
Bank of America. And it's the document that you fill out when you start a short sale. So you would get this document from Bank of America. You could find it on the internet. And when you've got somebody that has a loan with Bank of America, you would go and fill out a document like this. So you were going to basically fill in, who's the name of the borrower, this information. This part, the authorization to release information, you would fill that in. If you're going to normally have a real estate agent that helps you with it, so put in the name of the real estate agent that's going to be a real estate agent you found for the borrower. Then you've got some other information here. You're going to fill in the borrower's information, say Joe Smith, fill all his information in. You're going to select that, yes, it is listed for sale. Have you received an offer? Yes. Date of the offer amount, this is where you put in your 25,000. Then you're going to put the agent's phone number, this sort of information. Once you get this all filled out, they're going to have a series of questions. You're going to have to help the borrower or the real estate agent that you pick out that has training in short sales will have to do this with the borrower, because 99% of them can't do this without help.
Fantastic. So that's what the actual paperwork might look like. Every bank's a little bit different, but they all have these sorts of document sets for the paperwork. Let me see here. I'm going to check something real quick. I want to make sure we got the right sign-in sheet. Let's see there. Okay. So now with this, let's see, where were we? Okay. So now
this is,
what is a hardship letter? Let's talk about that. With short sales and with banks, they will not be as excited about giving away debt, forgiving debt, if they can't see a reason that to the banker makes sense. So they will also look at a hardship letter. So this is a letter that you are going to write on behalf of the borrower, where basically you'll talk to the borrower, you'll let them verbally describe some of the things that went wrong. You'll have a few notes made on all of that. And then you're going to assemble a nice letter that in a friendly and respectful manner, that doesn't sound arrogant, that doesn't sound angry, that sounds friendly, that sounds respectful. Then you will have the seller sign this letter after they read it and approve it. After they read and approve that it makes sense, you have the seller sign the letter and then you submit it to the bank. And then basically with that, the borrower should mention things, or may want to mention things if they're applicable, that they lost their job, or maybe they had a medical problem, or maybe they went through some other unique extenuating circumstances, things that are reasonable reasons for not making the payment. Not that they went and wasted all of the money on expensive champagne. That's not a good reason, but if they had a problem with alcoholism, that could potentially be a reason. Something like that, something where the tone of the letter is that the borrower is wanting to pay but unable and has been simply devastated with the problems. That's what you're trying to convey. Okay, now the next question, and it's a great question, is where do you get the money to buy the asset? Imagine that you don't have the money to buy, say, $1 million asset or $100,000 asset handy. How can you do a short sale if you don't have money? Well, that is a great question. The answer is you can partner with a lender that has cash. Notice I said partner. Okay, I said partner. I didn't say borrow. And what I mean by that is if you go to a professional lender, and I'll show you an example here of Scotsman Guide. This is a place where you can go to find professional lenders. They are not going to be too keen on loaning you money for a short sale normally, because of the fact that in order to submit the offer to purchase the asset, you have to submit a document called a proof of funds in most cases. This is a document showing that you really have the money. And it can't be something where it has to be that whatever legal entity, whatever person it is that is making the offer, there has to be a bank account matching that name or legal entity, showing that amount of money available as cash in the bank. So banks won't normally take a lender's letter because they don't want to deal with a lender. A lender might come in and make a contingency, like I'll make you the loan if the house is in good condition. But see, a bank doesn't want that. A bank just wants it off of their books. They want to sell it to someone that has cash. So you need to show that you have cash. And one technique that you can do is you can go to Scotsman Guide and you can contact professional lenders, but instead of asking them for a loan, you can propose a working model where you would like to partner with them, where you want to focus on short sales, and you will split 50% of the profits. You can negotiate whatever you want to negotiate with them, but I'm just suggesting 50% might be a good way to approach it. But you could offer them 25% if you want to try to hold on to more. But I think 50% is a good way to approach it. So you do all the work with finding the motivated seller, negotiating with the bank, but then you actually are submitting an offer from an entity that shows the proof of funds that you're connected with. So you have to have a lender that understands short sales, but a lot of them understand short sales. If you're in the real estate space, you certainly can find a partner. It's easy to do. I mean, I'm not saying it's extremely easy. You may have to spend a few hours or days on the phone talking to different people, but you will find one eventually that says, you know what, I like the idea, especially if once we do the deal, I can also put a loan on it. And that's fine. That's fine. You can let them do that. But for the purpose of closing the transaction, you need to buy it with cash. So I'm going to show a walkthrough here of what Scotsman's Guide looks like. It's really quite useful. My name is Benjamin Z. Miller. And in today's video, I'm going to show a useful tool that you may not have seen if you're a new investor. Let's say that you are looking for some sort of a loan for a particular asset class. In this example, let's say you found an apartment complex that you want to purchase with your group. You've worked out a deal with the seller where you're going to buy the apartment complex for $1 million, just as an example. You can come to Scotsman Guide and you can actually find, for whatever state you might be looking in, for wherever you might be looking, and also the particular types of characteristics of the apartment complex, you can do that. So let me show as an example. We'll click in here, and here we've got some choices: multifamily, hard money construction. Let's select multifamily. Okay, property type, we'll go down and we will select apartments. Property status, this is important actually, because a lot of times if you're a new investor and you've got a low occupancy rate, it's harder to get a loan from a bank or from a lender. So it's easier in the beginning to get loans where the occupancy rate is higher. That's true across the board, but especially if you're just starting out. So let's say in this example that the apartment complex is at least 75% occupied. Then you can choose what type of borrower. Let's say that you're going to do it as a limited liability company with you and your friends. Location, and we'll just pick as an example, Texas. Purchase price, we'll put in $1 million. Down payment, let's say 300,000. And then the apartments, nothing special there, so we'll just leave that blank. We'll do a search, and we find that Whitlock Capital Group would actually be a possibility for that particular deal, and then you could reach out to them. So it's a nice tool. It's useful. I use it fairly often, and I encourage you to check out Scotsman Guide. Very good. So I just wanted to show that, to kind of give an idea of where you might go, but you can find partners anywhere. Okay, so let's go through the important points with short sales. First of all, to successfully do a short sale, you absolutely must take control. You cannot engage in a short sale if you've got, for example, maybe a seller that is, say you have a seller that is not cooperative. You don't want to.
It's like, so if you look at the.
Let's see what that is. It's a YouTube. So at any rate, you want to make sure that you've got control of the situation. So you want to test the seller before you start. So tell the seller, look, I'm going to try to get this worked out with the bank where they forgive the debt. But, there's no guarantee I'm going to be successful. But if you do nothing as it is, you're going to lose the property, and then you're going to have a foreclosure on your record, and that'll make it harder in the future. Do you want me to try? Well, yeah, I want you to try. That sounds good. Okay. You understand you can't get any money out of the deal because the debt's too high. I'm going to negotiate as cheap a price as I can, but the most I can do is pay you $1,000 or $2,000 or $3,000, whatever amount you want to offer. And that's only when the deal closes, so that you've got money to move out, and we'll structure it like that. So if they agree to that, great, then you can proceed. But if you get a seller that's like, well, now hang on a minute, I'm not sure about that. How does that work where you're going to buy it for 80,000 and it's worth 200,000? Shouldn't I get more money out of that? If you start dealing with that sort of a seller, just walk away, because if they're hard in that first 1 or 2 or 3 minute, 5 minute, 10-minute conversation, you're not going to be able to get that short sale through, because you're going to be fighting with them at every point, and it's just not worth. Just let them deal with their own problem and go find another seller that's more willing to work with you. The second thing is, you want to bring in an agent for the seller. What I mean by that is, you want to have a real estate agent that and you want to suggest to the seller that they use that agent for the short sale. That agent is going to be important, because you need an agent that's loyal to you and will also fulfill all of their responsibilities to the seller. So with that, what you want is, you want to bring in your real estate agent, have them work with the seller, and they need to be doing several things that are critical things. You want to make sure that when they first put the property up for sale, that the agent remembers to take a picture of it for sale, a PDF file or whatever, because they need to show to the bank that, hey, we advertised it for sale. Because the bank may think, well, this guy just submitted a lowball offer, I'm not going to do that. But if they can see that it was listed for sale publicly, that's one of the things on the bank's checklist. And then as soon as it is put up for sale, that same day, your offer is going to come in, and it's going to be signed by the seller. And that offer is going to be, for example, for 80,000. And then you're going to remind the seller that you want the status changed to pending. So in the multiple listing system, they have different statuses, but you want to make sure to remind the agent to change it to pending. Otherwise, what's going to happen is more offers are going to come in that are going to be 140, 160, 100. All these other offers are going to come in. And if they mark it as pending, that will stop the flow of offers, because people will look and they'll think, I'm too late. Somebody else already worked out a deal to buy it. You want to manage the expectations. You want to have the real estate agent submit all of the damage documents. You've got to carefully document all of the damages, photos, different things to show how damaged the asset is, because the bank has to be able to understand why the price is so low. And if you can find some problems with the house, and virtually every house has problems if you look around. Now, I'm not suggesting you submit things that are not accurate, but you can submit things that are accurate, that are from contractors, and you can justify that lower price with some of the damages that may have been undiscovered. And then after you get the asset, this is so important. You don't want to immediately sell it the next week for a huge profit, because that's the mistake that beginners make. Is they're so excited that they got an asset at a steep discount that they cannot stop bragging and they cannot stop doing stupid things. And they go and they sell it a week later and they make 50,000 or 100,000. And then they talk with everyone about how great they are as an investor. And eventually the bank sees what happens, and the main banker talks to the other banker and he says, "Why did you sell that so cheaply?" And the other banker says, it was in bad condition. It was this, it was that. And this creates a problem for you, because you're not going to get another deal from that bank because of the way that you behaved on that first one. You just need to be professional, hold on to it for a few months or a year, and then sell it if you want to sell it. But don't turn around and flip things like that, because it makes the bank look bad. You also want to make sure that you have good organizational ability for short sales. That's so important. This is not a business. If you're a disorganized person, you will not love short sales. You should stay away from it if you're a disorganized person, because you got to have every form. You've got to have everything right. It's all got to be done the way the bank wants it. You can't easily it's not like you can just call up a big bank and say, "Well, look, I've got 19 out of the 20 forms that you wanted. Can't we just forget form number 14? Because it's not really relevant." The bank doesn't care. They've got some hourly worker that has a checklist, and that hourly worker has been told, if all 20 forms are there, then let it proceed. And if one of the forms is missing, don't let it proceed. So you have to have a personality type where you can do all this stuff, or where you can find someone that can do it for you. You got to have a lot of patience. You need to also remember with the seller to get an authorization to release, or the bank's not going to talk to you. You have to have the seller sign a document saying they allow you to talk to their bank. You need to do all of these. These things are so important. And the most important thing is you must have a motivated seller. Don't try to do a short sale on a seller that's not motivated. It's only when the seller has no options left that they're going to accept this. As long as they still think they have an option, they're not going to accept this. But once they reach that point where they realize they're out of options, they're out of time, they're going to lose the house, then at that point you have a motivated seller. And that is so important. So that is it for the presentation. I just have a few reminders, and then I'll open it up to questions. So the first reminder is about Google Sheet. I encourage everyone to fill in Google Sheet with some information so that we can send you a copy of everything, and so that we can stay in touch. The second thing is, if you have any friends or colleagues that you think would benefit from this meeting, please invite them. Tell them about it. Let them know that we're here. Let them know that if they're looking to do deals and meet investors, there's a group that they can come to. And then I also want to let everyone know that there is a mentoring program. This is something that is available. If someone is liking what they're seeing here in this presentation or some of the other presentations, but you want to work with me personally, that option exists where it's an annual investment program, a mentoring program where you can learn how to invest. I can help you with your deals. I can show you a lot of stuff. So that's something to keep in mind. Well, very good. That is it for our presentation. And now I'm going to stop the recording and open it up to questions.